Hey guys, Joel Frank here, market analyst for YouTrading, and today we're taking a quick look at Euro USD or Euro dollar. Because we do have a very important event coming up for this currency pair, the Fed rate decision, the July Fed rate decision. We are going to get the result of that at 7 p.m. British summertime. And then there's going to be a press conference with Fed Chair Jerome Powell, which is going to be equally as important, and that's going to start at 7:30 British summertime. So yes, potential for a decent bit of volatility moving forward. So let's take a look at the chart here. I've got Euro dollar on 4-hour candlesticks. And I mean, let's just sort of summarize the price action we've seen over the last couple of months. You can see in the middle of June, you had this big drop. You dropped from 121, around 121, in the space of a couple of days, all the way to 118.50. So a big drop, and that was triggered by the hawkish shift at the FOMC in the mid-June meeting. Remember, the dot plots were a lot more hawkish than markets were expecting, and the economic forecasts were also more bullish than markets were expecting. Subsequently, we then saw pretty much for the best part of a month, the dollar just remained under pressure. The main factor driving it, hawkish FOMC, to be honest. Markets anticipating that, especially compared to the likes of the ECB, the BOJ, and other global central banks, perhaps the Bank of England, also the Chinese People's Bank of China, that the FOMC is going to be more hawkish than them, and that was sort of supporting the dollar. But as you can see, in the last sort of week or so that I'll highlight here, you can see in that square, we've been mostly going sideways. And actually, the dollar has even, after reaching these lows in around 117.50, the dollar's actually popped out of that descending sort of trend channel that it had been in, sort of confirming the range-bound conditions that the dollar has since been in. And the range we're looking at is, to the downside, 117.50. That's your support that I've got highlighted here. And to the, capping the upside for now on 3 different occasions in the last couple of weeks has been this 118 sort of 25, 118.30 area, which we're going to stay in until this Fed event is underway. So what are we expecting from this Fed event then? Well, not expecting any major policy changes. Interest rates are going to be left on hold. QE is going to be left at 120 billion in asset purchases per month. So no massive policy changes there. We're also not getting any new dot plot or any new economic forecasts. So really the focus is going to be on the tone of the statement and the tone of Fed Chair Powell's remarks in the press conference, with the key sort of topics that markets are going to be listening out for being, number one, any more hints with regards to the tapering timeline. There's been no, basically with the tapering of the QE purchases, the Fed is talking about it. We know that now. They said that at the last meeting. But we don't know when they're going to announce that they're going to taper. And we don't know what that taper timeline is going to look like. So anything more with regards to that from Powell today will be interesting. Also, as ever, we're always interested in what the Fed thinks of the economy, especially inflation. Remember, inflation in the US has been really high recently, but the Fed has continued to characterize that inflation as transitory. Do they waver on this transitory line? If they did, obviously that would be taken as a hawkish signal that the Fed is worried about inflation and might want to raise rates more quickly. But most people think that's very, very unlikely. So to be honest, there is a risk that this Fed event is, a bit of a non-event. If Powell just sticks to the script from the last meeting, doesn't offer anything, any updated sort of outlook on the economy, doesn't offer anything new on the tapering timeline, well then that could be a bit of a disappointment, and then potentially we could just see the dollar continue to range within this recent range, or perhaps euro dollar could move a little bit higher gradually in the next couple of sessions, because US real yields have been moving lower recently, and that could start to weigh on the dollar a bit, pushing euro dollar back above the mid 1800s. Alternatively, there could be a hawkish or sort of a dovish surprise. Like some people are talking about Delta variant risks and the potential that that could encourage the Fed to be a little bit more dovish. Well, then in that case, we could see more pronounced dollar weakness that could, you know, perhaps bring the dollar back to its previous, well, not June highs, but second half of June highs here in the mid 1900s. You've also got to watch out for the 50 DMA and the 200 DMA in green and blue here. So that would be a good area of resistance on a dovish Fed. But you would certainly be looking for a move back up to there. And alternatively, like I said, any hint that the Fed's getting worried about inflation could put the dollar back on its downwards trajectory, or potentially Powell surprises us with a taper announcement. Most people, like I said, think that's not going to happen. That would be a big surprise, though. That would cause the dollar to shoot lower. Or perhaps Powell tells us that or gives a hint when the taper announcement is going to come, perhaps in the in the September meeting or something like that. That could also be seen as hawkish and could weigh on the dollar a little bit and push it back towards 117.50 or even below. So yeah, gonna be an interesting one, guys. Hope you enjoyed the video. Hope you found it informative, and I'll see you all in the next one.